Hello everyone, Chad Krober here, your purpose-driven lender, and I'm coming to you with our February economic update. And I'm just going to be speaking on a few key items that I think are important for us to pay attention to in the coming weeks and months as we move forward from things that I've collected from February. So the first item is obviously the third stimulus package to be passed by Congress is going to President Biden's desk and will be signed, fully expecting that to then begin the process of disseminating those dollars out into the economy. And that $1.9 trillion package is going to create a lot of interaction within the economy. A lot of people are going to use that in various ways, and it will help. Unemployment, depending on what you read and the opinion thereof, I'm reading anywhere from mid-sixes all the way up just below 10%. What's hard to know is it's really difficult to measure and understand who has kind of like somewhat given up on trying to find a job. And then once the economy starts firing again, will those individuals come back into the job market, or will they just hold back for a while? It's difficult to say. But the positive news is that we have now 16 states that have said we are just opening back up, and one of them being Texas. They've pretty much said we're going for it. Texas by itself is the world's 9th largest economy. So that is going to pay dividends for the U.S. economy by Texas opening back up. Hopefully, with the weather improving, California may follow suit, but who knows? Hard to say. Couple measurements around inflation. So the core CPI and the CPI both came in quite low. The core CPI, which measures the cost of food and energy, was only 0.1, pretty flat. The CPI, Consumer Price Index, was 0.4. Also pretty flat, not that aggressive, didn't really get a lot of headlines, and so that's a good sign that inflation is staying in check. But we'll definitely be wanting to pay attention to those numbers going forward in the coming weeks and months, because if we see those numbers begin to tick up, that means inflation is starting to gain some momentum, and that is the largest enemy of interest rates, because interest rates have to go up to keep inflation in check. Because if businesses and manufacturers are having to spend more money on borrowing money, then they will be less prone to raise their prices, and so they'll have to keep their costs in check as well, and they won't pass that on to the consumer. Overall, interest rates are up a little bit from their record lows back in December. We've seen a shift overall of a range of the 15 to 30 year coming up from the low twos and high twos to now about high twos and low threes. And still, keep in mind, it's historic, it's once in a lifetime, and it's a great opportunity to take full advantage of these interest rates to consolidate debt, get prepared for another purchase, or even still refinance and get a lower payment potentially. Lastly, home values are at an all-time high. Shocking to say that, but in the U.S. economy and locally in Oregon, we're at an all-time high. Also, inventory is at an all-time low. And so if you are looking to make a move in the coming year, it is important that you are prepared and ready, because it is a very competitive market. Reach out to me with any questions that you have. I hope you have an outstanding rest of your week. We'll talk to you soon.